All right, ladies and gentlemen, I hope you had a wonderful day. What we thought was the worst start in decades for the market was all recovered in one day, and now we are at where we ended last year. So the reason why is going to shock you. We have a lot that we're going to go over. There was oil down 4%. You had gold down almost 2% in the morning. Even the Fed futures, they were getting a little bit hawkish in the morning, but by the time the market went ding ding, everything started ramping up. By the end of Euro close, this one was a big one. Instead of selling off, we actually started to ramp up, and then we broke through every single level that we were just trading at. So we got a lot to talk about. I got a breakdown of what happened on the day. I got a bunch of different plays that we have to go over. Some of them I'm kind of excited about, and then we got to talk about what we have the rest of the week and some of the other keys. What I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/The Stock Market. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Ball right off the bat, like I said, we recouped every single day of losses this year just today. But the weird part about it was that the drivers weren't that big. Some were a little bit confusing. You had big tech going up. I think the NASDAQ closed at 2.2%. That is the biggest single day since November 14th. But it started with the chip makers. And what was ironic about it is that NVIDIA went up 5%. And people were saying there was a lot of good news about it, but there was also bad news in the morning. There was news that NVIDIA was getting ready to deliver these new sanction-compliant chips and that they're going to send them to China, but then there was another report that companies like Baba and Tencent are not down with those chips and they don't want to buy them because they are a lower tier. However, everybody focused on the good. AMD, NVIDIA, Intel, every single chip maker went up, and then if you remember what happened last week with Apple and Amazon and all the big tech names, they were all down, but today they all caught a monster bid. So that was one of the things. And then we had a bunch of Fed speakers, or really it was the Fed speakers over the weekend, Lori Logan, and then we had Raphael Bostic today. But the ironic part was they were both hawkish in terms of rate cuts, and those rate cuts happening sooner, but they were both dovish on quantitative tightening and more so advocating for quantitative easing. However, the market didn't care. They focused on the good of it, and then we started to ramp up even more. And then on top of it, the dollar was down, but it wasn't down as much as the ISM number that we talked about yesterday. And then oil dropped about 4.5%, giving up all of the gains that it had in any of those last days, just in one day, on the news that the Saudi Arabians are lowering the price of selling oil because the demand was not matching up with it. So this is what we woke up to. It was a lot to deal with, but like I told you in the beginning of the video, this whole entire ramp up, it was off of low volume, and it's not like one specific event caused it. It was more so just one of these Monday melt-ups, and this is what I was saying yesterday. Maybe we're going to get a lot of events, both good and bad, but it looks like the market is kind of doing its own thing as we are settling into this year. But now, with everybody reacting to this, you got people really bearish. Just a couple of days ago, we ended the 9-week streak, but maybe that was the healthy pullback. Maybe it's the double top. We're going to find out, but a couple of points higher from here, I mean, it is going to bring back the discussion of whether or not we are going to be hitting all-time highs. I got to pull that out a little bit. Yeah, you're like right there. So that's your first key, but coming into the second key now, we do not have much to deal with tomorrow. We are going to be getting trade numbers out of Canada and the United States. I even think you're going to get some other foreign CPI numbers to start off the week, so I would keep an eye out for anything in terms of China, Europe, Japan. They got CPI numbers as well. well. We'll see if that gives us any driver or if that moves the dollar. Again, I do think the dollar is a big deal, but then part of that move today in chips and tech, events like CES and then even the JP Morgan Health Conference, those could be big drivers. And like we talked about yesterday, a lot of the data is going to be on Thursday and Friday, so we kind of have a couple of days to move around with the momentum and all of that. But like I'm saying here, I would definitely be watching out for more biotech buyouts, because this morning we woke up to 3 of them, and then throughout the day 2 more were announced, and it caused some very massive moves. So that is key number 2. But to bring you into the final key, and this relates to what we saw today, we still need the dollar to play along. Today could have just been one of those Monday effects. We start off the week, everything goes up. Like I told you, it's not like the volume was high, but we're not out of the clear just yet. And this is what I mean by the dollar. Even though the dollar dropped a lot, it's not as if, oh wait, I don't think that can't be real after hours. If that already gaps up, then we're going to have a problem. But if you compare it to where we were at the other day, it's not like the dollar down, I think it was like 0.1% today negative. It's not like it brought it down, justifying us to go higher. Pretty much the 4 days the dollar went up, the market has recouped all of that, but the dollar is pretty much still holding some of those shorter term highs. So watch out for how that plays out tomorrow. Like we're saying, it's a week of bank earnings and then CPI, but one thing I want you to keep in mind, we talked about this today, the CPI is going to be a little bit more simpler than the non-farms. Why? Because a low CPI is going to be good and a high CPI will be bad. If the CPI comes in too low, I don't think it's going to make people panic. However, the thing going around Wall Street right now, people are talking about the PPI a little bit more than they are the CPI. Just like we saw with the non-farms last week, maybe the non-farms comes out, causes its own little reaction, and then the follow-up data like the ISM, in this case it's going to be the PPI this week, that may have a bigger effect. But other than that, it's pretty simple. We had a lot of momentum, a lot of different events to juggle. I wouldn't say just one event is what caused all of this, and like I'm telling you, I am chalking all of this up until momentum, and I do think the momentum is going to be taken over until acted upon by an equal or opposite force, earnings, the dollars, or the data. So we'll see what happens, but let us get into the plays. So right off the bat, I got a couple of different plays that I'm going to go over. I did make one play that I do not have here as the main ones, but let's go over Boeing. This is what we talked about yesterday. I did make a couple of plays, and I'll go over it, but one thing I want you to understand is that this play may take now 1 to 2 weeks before you get the next big move. There's going to be a lot of movement, a lot of headlines back and forth, and everyone's going to start to argue about this is good, this is bad, but it's going to lead into earnings, and sure enough, it could go up and melt up if there's no negative updates, but if there is bad updates, it will get clobbered, and then vice versa. If everybody is expecting bad, the stock's already down 9%, any good updates will be able to bring it up. So what you need to be watching out for, any more updates on grounding the planes and keeping them grounded for longer by the FAA, that will be negative. If you hear of planes returning to service, they complete their inspections, and those planes get back up in the air, that will be positive. But the real issue now with Boeing, if you've been following along with their story, it has to do with their production numbers. One, if they have longer groundings, that means people aren't going to be ordering them. They may get cancellations, and above all else, they're going to have to repair and do a lot of things for planes that they just recently delivered. The other problem is that the production gets hurt again, and they're not able to produce these planes because now they don't have the regulatory approval. People are getting worried about them, and now to get these planes at a high volume to bring Boeing back into that growth or their former glory, that's going to take some time, and the last thing you need right now is the FAA grounding some of the new planes that you just came out with. So that's what I'll be watching for. As far as the plays, I made 3 different plays on Boeing, and I started off with one in the morning. So we were talking about, hey, let's see where it's at. What type of reaction is it going to have? Is it going to have one of those Walgreens? And sure enough, it had the gap down. It went up, and then towards the end of the day, there was one more update. UAL, United Airlines, they said upon their inspection, they found a bunch of screws that were not tightened on 7 movement of their planes. That's what started to bring it down here, but sure enough, you watch that dynamic. Bad news, everybody freaked out. No other updates. Everybody or the computers kind of bought it up. They're like, okay, we're good, but it was still down, and then it started to react to news events. I think it's going to be a long 2 weeks. If anything, I will show you back here on the chart. This is one of their biggest downside volumes in almost a year, and anytime they have some of these fiascos, it kind of moves in bursts. So it's a good opportunity, but it will be very tricky for options, and that's why this morning I started off with one feeler. Why? These options were all up like 1,000, 2,000% in the morning. I grabbed one of the $200 puts for $80, try to keep it small, use that as my place marker, so throughout the day I would be able to find other plays, and that's exactly what I did. So as the stock was trading, first play got demolished all throughout the day, and it was like right around here, a little bit after 11:30, it was around 12:30, I decided to go with two other plays, and then I grabbed a January 19th 180 put further out of the money. They were going for 30 cents in the morning, so I bought 10 of these at 9 cents a pop. I figured, hey, out of the money, if anything goes crazy in the next 2 weeks, we will be able to make money on it, and it's showing January 12th here, but this should tell you what's going on. The option chain showed the 12th. These are for next week, so it's a little bit amount of time, and that is the risky part. You definitely need more than a 2 standard deviation reaction after getting a 3 sigma move today. But then the other play I made, I waited till the premiums went down, and then I grabbed one of the 215 puts closer to the money for 80 cents, which was a very good deal considering it went up about 100%. Or no, I spent $1 on it, not 80 cents. But that way, that was the first play. I was able to get back in. I used the time premium, and now I spent about $300 total. I lost $40 on the first play, made $50 on this play, and then another $16 on the other. My max risk over the next couple of days, if I don't sell out or nothing bad happens from here, it will be around $300. So those are my plays. The only other thing I want you to look out for is the option chain. If you are going to try to find a good deal on the options, this trick I am going to show you will help you out a lot. I've talked about this a lot in the past on some of the older option tutorial videos, but it's very simple. What do you notice? 227, 225, 222.5, 220, 217.5, 215, then 210, 205, 200, 195, 190. If you don't notice it, these contracts all move $2.50, but then right here, this is like the invisible checkpoint. This is why I went with the 215s, because they were only $2 out of the money from the next closest strike, but what's the one below that? It's $5 below. So if you're paying for the 210s and getting $5, it may look like the next in line, but it's double the distance, so you may think you're getting it a little bit cheaper, but these ones that start moving $5 at a time, if they are still cheap, or even if they start to get premium, these are the more expensive options. So keep that in mind, but that is play number one. Then play number two, I got another options idea here for you, and it has to also play, in fact, with an event, but the play is Pfizer. And what I am going for is both the dividend payout that is coming up as well as the JP Morgan conference tonight. However, the only difference on this play compared to a lot of other ones, I'm not saying you should start this play. You may be able to, and I'll show you what you could do with another example, but I already own this for my swing position. Remember, I was holding those Pfizers. I was going to tax loss sell them. Instead, I made a huge average down, and now I have 2,000 shares at around $29 that I bought that I'm swinging. I'm up on them about $1,000 or like 700 depending on where it closed at, but my idea was, hey, they have earnings coming up, they have ex-dividend, and now they have this JP Morgan conference tonight where they're going to be presenting stuff. So my idea was I want to buy some puts to protect that swing position, and then ex-dividend is only a couple of days away. It might get that ramp up. I have a lot of shares on there. It's paying a high yield. We can also get a payout from that as well. So what I did was I bought puts to protect my position, and the fact was I already had a little bit of cushion on this stock. The puts that I bought were cheaper than the dividend that would be paying out. So don't forget about this strategy. I'll show you when I get to the option chain, but like I'm saying here, another example could be Abivi. They have a dividend payment in a couple of days, or the ex-dividend, but if you go look at their option chain, the at-the-money puts for that date they are around what the dividend is paying. If you are not familiar with the strategy I'm talking about, we even did this on MPW and it ended up working out. That was before we got clapped on it. This was like middle of last year, I believe, but the general idea here is if you have cushion on a play and you're making a play on it, what you want to do, if you could grab puts that are cheaper than what you will collect on the dividend, you could essentially let your dividend payment pay for your protection if you are already up. So like I'm saying, my plays are around $29. I have 2,000 shares on Pfizer, and what I decided to do was grab 30 of the 29 puts for January 19th, and they were 27 cents. The dividend pays out 45 cents a share. The only caveat on this play is that the dividend, ex-dividend, is on the 25th, so I got the protection a week early, but like I'm saying, they had that event here today, and it might get the run-up. I really just want to protect for the event, and then if it goes up from the event, I'll have enough cushion where even ex-dividend shouldn't worry. But ideally, if you were going to do this on the ex-dividend and you wanted to hold until the ex-dividend, you would just go to when that ex-dividend is on the expiration. But in this case now, it protects me, and if you did notice by the numbers, I have 2,000 shares. That would have been 20 contracts. I bought 30 to make sure that I could protect a little bit more. If it does flush, we could protect any of the gains that we have, and then maybe walk away with a little bit of a bag, especially considering that Pfizer has gone up like 10% just in the last couple of weeks. So keep that play in mind. But like I'm telling you, you might even be able to execute this on Abivi. They have their ex-dividend this week, and their dividend is $1.55. The at the money 160s, they are going for $1.49. So that'd be a little bit out of the money. There's still a little bit of risk you're taking, but if the stock moves around, you start to see the theta go down and the stock is lower. If you find this opportunity for arbitrage, again, you could play ex-dividend, let the dividend pay for the play, and then you could go from there and see what happens. But that is play number 2, and then finally, play number 3. Like I told you guys, there is a lot of biotech stuff going on. That's definitely what we saw this morning, and I have to throw out EYPT. I've been talking about this for a couple of weeks now, but why this is on my radar is because, 1, the biotechs are getting bought out like crazy, but 2, the theme of a lot of these buyouts is that these are companies that just got approval recently or within the last quarter. You're seeing a lot of companies get bought out, even CYTK, that was another one today. We even had old shares from one of the flips. I got like 90% on it, and then it went another 20 or 30% higher after the last couple of days, but they recently had a good FDA data in drug approval, and then sure enough, a couple of weeks later, they're getting a buyout offer. So EYPT, this is one on my list. We may go through a lot more on stream, so make sure you're there, but I do want to watch out for this, and like I'm telling you, I'm not fully sold on it because this is a game of Russian roulette more or less, and you know how biotechs could be, but what I'm saying here is that you don't need to play the approval, but what you want to look out for is companies that have already got it. If they get an FDA approval, they are probably going to be a buyout candidate, especially a lot of the cancer drugs right now, because that has been a hot space in biotech land. So going to be keeping my eyes out for this. That is play number 3. As far as everything else, I only made one other play today. We grabbed those Boeings, but then I made a play on gold. So I didn't buy GLD, but I could show you here through the chart. I bought an MGC, and does it show it really good? I don't think so. Maybe I'll have to go to the futures. Why? Because I've been telling you about these prices. Again, we had some beautiful flips on gold already, but remember I said 2040 to 2020 is that double dip zone? Well, I wanted the lower end around 2020. That was like the highs or like the support level around that Fed day, and well, it came back this morning. It started to ramp up. It was like 2028, and I was like, listen, I don't want to miss out on it. I don't want to get too picky over a couple of dollars, but these big contracts, they could cost a lot, so instead I went with a micro contract, grabbed 2 of them. They shot up. We were up like $300 at one point, and then I think I closed around 100, a little bit more than that, but I will be holding it, and I can hold this for a little longer because it's smaller and it won't abuse you to the downside like a big gold contract. So going to be watching out. Again, that play is still related to rate cuts and everything else going on with how we're watching the Fed, but besides that, I will be watching some of the China plays tomorrow. Still holding the Russell plays to the upside. My ES short to protect came back down to negative. We just had greens on it, but I kind of like the dynamic and how it's been playing out. So still riding out all of those. We'll see what Pfizer does tonight, and then we'll get into the morning and see where the momentum takes us. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember, baby, self-power. Self-power. Small good decisions, self-power. You give so much attention to the material, the intellectual. What about the thing that exists already in you? Use what you already have and make the most of it. But Chad, I love you. God bless you. Drink that water. Stay hydrated and healthy. I'm going to see you, man. I hope you're already enjoying the start to the new year. Second week in the books. But now, get ready for it all. We have so much more, and it's going to get volatile. But I will see you in the morning. Have a wonderful evening, and horn.